Welcome. In this video, will Zbcn coin rise again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking carefully at the chart, we can observe that the price is currently moving in a very characteristic structure. The descending triangle pattern, which is one of the most common patterns that traders, especially those interested in technical analysis, often encounter and which contains important signals in the market, is clearly visible here. Descending triangle patterns indicate that the price is holding at a certain support level, but is gradually narrowing with pressure from the top. The upper line of this pattern, the resistance line connecting the lower highs, forms the area where the price is squeezed over time. While this pattern is usually interpreted as bearish in classical technical analysis sources, the potential for an upside breakout can also be quite strong, especially in some cases, and depending on current market conditions. At this point, we need to pay attention to the upper line of the descending triangle pattern on the chart. Although the price has touched this line many times and has experienced some retracement each time, these contacts may also indicate that the resistance point is weakening. This is because in technical analysis, each tested resistance loses its strength over time. Therefore, each new contact of the price with this upper trend line can be interpreted as a positive signal that a breakout is actually approaching. Currently, the price may be preparing for an upside move within the narrowing structure of this descending triangle. Especially if there is an increase in volume and the price manages to break the upper trend line of this triangle to the upside, this would bring a very positive picture. Because an upside breakout of the descending triangle means that the market has left the bearish pressures behind and buyers are starting to take control. In such a scenario, a new uptrend could begin for investors. Moreover, when this breakout occurs, we may not only be talking about a short-term move. The upside breakout of such patterns often signals the end of an accumulation process and a new direction for the price. This can open the door to wider price movements in the medium to long term. In particular, the breakout points of triangle patterns can cause voluminous and sharp price movements as they are used by traders as triggers in both manual analysis and algorithmic systems. In the current technical outlook, the price approaching the top line of the triangle seems to be a harbinger of a possible breakout. If this line is breached, a new support-resistance transformation is likely to occur technically. In other words, this upper line, which previously worked as resistance, may turn into support after it breaks, and the price may enter a more solid and safe uptrend after settling above this level. This creates an environment where traders can safely protect their positions and make new purchases. One of the most notable features of this descending triangle structure is that, as time passes, the breakout is getting closer as the triangle narrows. In other words, as the pattern technically nears its end, a decision moment approaches. This decision moment often results in a strong move. Given the current positive expectations and in line with other technical indicators, the probability of this move to the upside seems quite high. Of course, not all technical patterns produce guaranteed results, but the positive convergence of existing signals is promising for traders. In addition, the fact that the price has previously tested the bottoms in this descending triangle and bounced upwards with strong reactions from these areas shows that market participants accept these levels as strong support. The fact that these supports are working and the price is heading towards the upper resistance line indicates increased confidence on the buy side. But we cannot decide the analysis only with the descending triangle. Let's look at the other metrics. Keep watching. A W pattern has formed on the chart, which is quite remarkable and has a strong meaning. This pattern is also called a double bottom or double bottom in technical analysis and usually signals the end of a downtrend, that the market has bottomed out and a new uptrend is about to begin. Currently, we see that the price is positioned at the second bottom of the pattern. This is a very critical and promising area for traders. This is because such patterns are among the structures that determine the direction of the market, not only in shape but also psychologically. The W pattern is a classic reversal structure with two lows and a reaction high in between. At the first low, there is a huge selling pressure in the market, followed by buying that pushes the price up, but this rise is not long-lasting and the market falls again. However, the second drop remains weaker than the first, which is considered a very positive signal that the selling pressure has subsided and buyers are preparing to re-engage. Right now, the fact that the price is right at the second bottom looks like a window of opportunity in terms of technical analysis. Because if an upward movement starts from this point, the pattern will be completed and targets can be set well above. One of the most impressive aspects of this pattern is that the second bottom is usually supported by higher volume. In other words, traders tend to value this area more than the first one and consider it as a potential buying zone. This increases the likelihood that the price will initiate a sharp and decisive move upwards from this area. Especially after such moves, the distance to the middle point of the pattern, called the neckline, can be covered quickly. More importantly, once the neckline is broken to the upside, the bullish move becomes much more powerful and is often supported by bursts of volume. Looking at the current situation, the structure of the pattern is quite clean and gives strong technical signals. As the price consolidates at the second low, other indicators may also be confirming that this is an important support area. If this support area holds, an upside bounce is not only a possibility, but also a very logical scenario from a technical point of view. This is because a rebound from the second bottom is not just a short-term reaction, but could also be a harbinger of a long-term trend that will lead to the completion of the pattern. However, W patterns should be evaluated not only by price structure, but also by volume analysis. Usually, an increase in volume at the second bottom of the pattern indicates that buyers have stepped in, which is interpreted as a positive sign. If the volume in this area is supported, the upward movement of the price will be on a firmer footing. This gives investors confidence and encourages more capital to enter the market. After the uptrend up to the neckline of the pattern, once it is broken, the price target is calculated by projecting the distance between the bottom and the neckline upwards. According to the current technical outlook, this target is well above the current price level. This could potentially signal a bullish move that could exceed 100%. Especially after the price completes this pattern, it can build a much more robust bullish structure with support-resistance transformations. At the moment, the developments in the second bottom zone will be extremely decisive. If a strong upside candle closure comes from this area and the buying volume increases, this will be considered as a very positive sign for the pattern to be triggered. From this point on, the direction of the market will be up, and traders can shape their positions accordingly. Especially in such strong reversal patterns, the post-breakout movements are usually stable and sustainable. The MACD indicator is currently on the verge of a very important technical signal. The notable feature on the chart is that the relationship between the MACD line and the signal line has begun to shift positively again. In particular, the upward movement of the MACD line below the zero level is considered by investors to be a potential indicator of a trend reversal. The current technical outlook strengthens the possibility of an upward crossover between the MACD line and the signal line. If this crossover is completed and the movement is directed toward the zero level, this could be an extremely positive development that could accelerate the upward movement of prices. A crossover below the zero level of the MACD typically produces strong signals that the market is at its bottom levels and a recovery process may be beginning. This is because this area is generally considered a zone where excessive selling has occurred, downtrends have ended, and it's now time for buyers to enter the market. Therefore, the MACD line crossing above the signal line is seen as a reversal signal in technical analysis, and the fact that this reversal occurs below the zero level indicates that the potential upward movement could be stronger. We need to pay attention to MACD crossovers. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.